You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? This is Mike from The Moose on the Loose. I hope you are doing well today. As expected, I am talking about the two Brookfield Renewable, BEPC and BEP, along with Brookfield Infrastructure, BIPC. So one reported on May 1st, the other one reported on May 3rd. So let's get on with the earnings. So let's get started with Brookfield Infrastructure. This is the first one which reported on May 1st. So FFO per unit increased by 8% to 78 cents per quarter, which was pretty solid. Actually, the company reported a good quarter, mostly driven by some acquisition, some asset recycling, and of course, indexation of current contracts. So they have escalator contract across their multiple utility businesses that enables them to increase their price and kind of like fight higher interest charges that is happening, of course, and also inflation. So by segment, because the BIP is divided into 4 segments. So you have utility business, transportation, midstream, and data centers. So for the utilities, the FFO decreased mostly because of the sale of Australian assets. But if we take that outside of our calculation, the organic growth was up by 8%, mostly driven by indexation in their contract. As for the transportation segment, it went up by 57%, but that was mostly driven by the recent acquisition of Triton, which is a railroad company. If we take away the acquisition of Triton, we have a organic growth of 10%. So again, pretty solid results for both utilities and transportation, with high to double-digit growth on both sides. As for the midstream service and the data center, it was relatively flat, so aligned with the last quarter last year. Not much to say about this one, besides the company continues to recycle assets across both segments. So the whole idea here, and this is at the center of Brookfield's strategy, is to acquire asset, improve its value, and then eventually sell it back to the market, like on the market, making a profit and then reinvesting that money elsewhere. So we are really talking about asset recycling that keeps on and on and on. They've been doing that for decades, and it's actually doing pretty well. For the rest of the year, management also made a comment about a higher level of activity around mergers and acquisition, probably fueling a little bit more their asset recycling strategy. In other words, they see more activities. They see that the market is a little bit more confident. So we will likely see more deals going forward, which is definitely good for BIP. No dividend news this time. The dividend was recently increased, so that's why we're not talking about another dividend increase. It's already been done. And for the rest of the quarter, it's pretty much business as usual. Brookfield is in line to keep on reporting like the guidance that they already issued for 2024. So management was pretty happy about it. On my side, I have in my portfolio. It's not a huge part of my portfolio, but still definitely happy with the result. You know, it is part of the investment you must keep for a very long term. All of those assets are generating cash flow, but they are for the long term as well. And as long as I see FFO per unit growing, as long as I see management telling me that they are going to keep up increasing their distribution year after year, I'm not too worried about it. It's really this type of business that I put in my portfolio, and I don't think too much on it. Moving on to Brookfield Renewable, so BEP or BEPC, that reported on May 3rd. I already told you about the big news that Microsoft inked a major contract. So Brookfield Renewable will provide Microsoft with 10.5 gigawatt of energy in the next 5 years. It is a one of a kind of a contract, the first one to be signed with that magnitude with a corporate partner. Most of the time when they sign big contracts is with government, but this time it's with a corporation. Microsoft will use that clean energy to support its AI and cloud business, which is definitely a good sign, and that propelled the stock a little bit higher. I mean, it's a good thing because investors of like shareholders of BIP and BEP didn't get it very well over the past 2 years. It was a tough market for those stocks as they are in the utility business. It is capital intensive. The market is concerned about the rise of interest rate on their debt. And unfortunately, they have not performed well on the market. But now, when you look at the numbers, well, we have a similar story with Brookfield Renewable, where revenue increased by 12% and FFO per unit increased by almost 5%. So again, pretty solid. Most of it was driven by their hydroelectricity fleet. A lot of projects over there, a lot of recycling as well. So they have recycled for $3 billion in assets already, and they ended up the quarter with $4.4 billion in liquidity. So the company just tells us, you know what, we are in line with our target to deliver double-digit FFO per unit growth. So their target is 10% with a 5 to 9% distribution growth rate increase for the coming years. They are still in line with that, and they keep on recycling their assets. So that's why they have that $4.4 billion in available liquidity. Of course, it's not just cash. It is partly cash and partly line of credit. But whenever they see a great deal, they can jump on it because they do have enough money to do so. Thinking of the deal that just happened with Microsoft, it is likely going to have to open the door with more major deals like this. Management mentioned that they are well prepared for that. They can provide 24/7 clean energy, which is a great advantage compared to other competitors, especially as a lot of companies will like to boost their ESG report and have good conscience saying, hey, we're consuming a lot of energy, but it is green energy, so it's good for the planet. While they will likely try to find deals like the one that has been inked with Brookfield Renewable. So when I look at my holding in my portfolio, BEPC still down 9%, excluding the dividend. So I'm pretty much close to breaking even, I guess, if I count all the dividend I received since I invested in the stock in the first place. But yet, not a marvelous play in my portfolio so far. Again, Brookfield Renewable, Brookfield Infrastructure, long-term play. I don't mind too much having a few losers in my portfolio, especially if I'm just down 9%. It's not much anyways. So I can't afford to be patient. Anyway, it's my Lira account, so I'm not going to use it for the next, I don't know, at least 20 years, maybe 25. So then I don't really need that money for now. It can continue to recycle their assets and invest in more utilities going forward. I don't really mind. So far, 2 great quarter for Brookfield Infrastructure and Renewable. Now I'm looking to get the information on BAM and Brookfield Corporation. I think it's going to happen next week. You can be sure that I will discuss those as well. And before I let you go, just want to let you know that I did an update on my Brookfield report a couple of months ago. So I am going through all the Brookfield family, trying to explain everything around them, the difference between the C-class, so BEPC and BEP, the trust units, telling you more about how they are spread, the holdings and the shares. of each of them, the role of Brookfield Corporation, the role of Brookfield Asset Management, and so on. And you can download this report for free. You just have to key in your email, and there you go. You're going to be able to download the report. So please go on the dividendguyblog.com/report. So quite easy. The dividendguyblog.com/report, and you'll be able to download my Brookfield report for free. All right, Moose, that's enough for today. Tomorrow we're going to talk again, and we are finally going to talk about Bell and TELUS. So I don't know when I will publish this podcast, because I will need a little bit of time to look at TELUS earnings that will be reported on Thursday, but this will be the topic of our podcast tomorrow. All right, until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.